So everybody, today we are going to look at two new pieces of updates on the web page, and I think both of those have been asked for as questions by many of you uh, during previous meetings, as well as over the messaging groups that we are running. So question number one is, uh, if I look at, for example, let's just pick a random trade out of the list, and this is for TurboPack. So if you look at, let's highlight this one. So let's say look at this trade. So this one came up on February 13th, about a week or so ago, and then it had a target buy of 83 cents. And since this when the market opens next day, when you are actually trying to execute this trade, uh, it may not really open at 83 cents. It may open higher or lower. So the question has been that how do we ensure that the expected gains that we have and the profit that you see on top of this page is considering not just the target buy price, but also the actual execution price for that particular trade. So this is a new feature that has been introduced over past few days, and now for trades which happened, and you know this update happens like once every week or so, but what you see is that the execution price is different. So you can see that this particular thing is 60 cents. This was the execution price, although the target price was 83 cents. So when next day happened and the market closed, at that point this contract was available at 60 cents. It may have been up or down through the day, but when the market closed, that's the point we take. So there is 100% probability that if you um, try to buy the trade at least before closing of the market next day, then you would have been able to execute it at 60 cents. So you will see that again and again. So for example, this trade, the target buy was 56 cents, but it could only be executed at 65. So there is a 9-cent difference in this. On the other hand, the next trade here, the target buy is 38 cents, but it actually crashed a couple of points. I think the stock would have opened down a little bit, so you were able to buy it at 18 cents. So what I do typically is that I will make the buy for my own trades at whatever point I get, but the target sell does not change. So for example, on EMR, even though right now it's showing 94% profit, the target sell is still 76 cents. So when and if it goes there, you would have made a neat profit from 18 cents all the way to 76. It also goes the other way. Let's see, let's search for a trade where, yeah, this UNP, this looks like a good example. So here target buy is $1. You can see it here. But next day the stock, I think, opened up and you could only execute it at $1.16. Again, you would notice that your target sell price hasn't changed. So I would have entered the trade somewhere between 1 and 116, and maybe even slightly higher if you have executed, let's say, um, earlier than towards the end of the day, but the target sell price remained $2. So this feature allows you to have an absolutely realistic view for every single trade, and then you can see that there are yeah, this trade is a good example. See this one. So it opened at the target buy was 51 cents. I think the stock jumped. You could only execute it at 99 cents. So it really didn't make sense to make this trade, because it's not very helpful to buy something at 99 cents when the target sell price is $1.02. So clearly the sell target was met, but you would not make too much money making this sort of trade. So on the other hand, this one here, the target buy was 27 cents. You were able to execute it at a lesser price than that, at about 16 cents. Right now you have already made 106% profit, but it has not met the sell target of 54 cents. So here you can make more money. So net what happens is that now the profit that you make is a function of not the target buy price, but the actual execution price. So for example, when for this particular stock it says 106% profit, the the buy, it was executed at 16 cents, but the price of the contract at yesterday's closure was 33 cents. So that is where the 106% is coming from. It is not based on the target buy price, but it is based on the price at which a trade is executed. So I hope that's clear. And so eventually the numbers that you see and this is for TurboPax again, default strategy. So numbers that you see is that you have made about 1,400 trades over last 2 years or so, and where every trade you would have invested $250 or thereabouts, and the expected gain or average gain is about $94 if you had followed this strategy of buying and selling process. So I hope that helps you guys get answer to the question of what is the impact of execution price and actual execution price over over all these trades that we are making. The second question that has been asked is also quite interesting, and that is, what is the cash flow going to look like? So across all these trades, and because this graph here, it's a nice graph, it's an important graph, but it's profit made over time, this particular graph. So what it does is it tells you that if a trade was all the trades that were made that were bought before that given date, what is the cumulative profit till that point, and it's profit. But the question is how much money you would have had to invest, or what would your cash flow have been. So we introduced another graph here, which is cash flow over time. This is a very interesting graph. So let me take you through this slowly. There are 3 lines on the graph. It starts building from Jan 2017, like every other graph that we have. The first line is cash that you have invested in trades. So this is the orange line right in the middle. So this is running all the way from January to 2017 to now. So you can see the number, this number popped up here. It's about 308,000 of total cash that you would have invested over time, not in one day. And this gray line is telling you, while you are making those investments, how much money are you receiving, how much cash you are receiving from those trades. So this line is looks like a pretty healthy line, and by this point it is at 424,000. So while you have invested 308k of total money over the last 2 years, you would have a receivable of 424k as well. The blue line here is just the difference between these two. So what that means is that whatever the blue line is your actual cash in hand by the dint of making all these trades. It's very important to understand this. So you start here and you start buying, and the orange line starts going up and up and up, and the blue line starts to go down and down and down. And what's happening is that blue line is the difference of how much money you have invested, orange line, and the how much money you have received. So when you just started investing, you will not get a lot of money, because trades take few days or sometimes even few weeks, mostly few weeks, to mature and give you some profit. So therefore you can see that blue line actually starts to go negative. Pay attention here, because this is minus 5,300, and I'm going over the blue line, and it goes slightly up and then starts to go down again and again. and the lowest you see is about $8,000. So if you had started here, um, the maximum money that would have gone out of your bank account is about $8,200, because till the point this line is negative, uh, the money is going out of your bank account. When this line turns positive, which is what happened somewhere in the middle of 2017, or slightly earlier than that, what that means is that the gray line, which is cash received from trades, has exceeded orange line, and therefore you are playing on house money. So from this point onwards, when the gray line went up and crossed over decisively, you are uh, pretty much playing on house money. So the maximum investment in this scenario uh, from out of your pocket would have been about negative 9-10 thousand.